It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Let's get right into it. Intel, symbol INTC on the NASDAQ, is the world's largest logic chip manufacturer. It designs and manufactures microprocessors for the global personal computer and data center markets. Intel is currently trading at $28.85 with a market cap of $123 billion. Intel is currently paying dividends for a yield of 5%. After the stock was roughly cut in half over the past year, it leads to the question, is this value or is it merely a value trap? The company did see a rough 2022, as seen in the share price, but its Q3 revenue fell by 20% year over year, and its non-GAAP EPS fell from $1.45 to only 59 cents. This can be attributed in part to weakening demand, which obviously they can't control completely across the entire computing market, but revenue for client computing was down 17%, and data and AI was down 27%, so quite significant for a company of this size. As well as costs climbed on top of that, leading to compressed margins from 58.3% in 2021 to only 45.9% in 2022 on a non-GAAP basis. The company is currently trading at a valuation of roughly 15 times its 2023 guided adjusted EPS, and that's a bit higher than the trailing non-GAAP. So if you Google it or on GAAP basis, you'll see about a 10 to 11% times, which this is just due to it being trailing and not looking forward. And we're seeing these lower numbers now, which causes a lower valuation when you're looking backwards. The overall computing market has fallen, but Intel has failed multiple times over the past few years. For example, the failure to get past 14 nanometer, which they have got past now, but that was probably the biggest stumble they've seen in decades. But more recently, we saw them just fall apart when they're trying to launch their dedicated GPU market. It was just, they couldn't launch it on time over and over again. They missed their mark again and again, and then it launched with severe technical complications, to say the least. So the 14 nanometer is now past. They've moved past. They're on 10 nanometer now, and they're moving to 7 this year, hopefully, I should say. But during that time, it allowed their competitor AMD, who trades on the same symbol on the NASDAQ, to surpass them in many ways or trade blows in many other ways. Intel effectively just rolled out the red carpet for the red team of AMD during this time, and that failure seems to pause. They seem to be trading blows now again. So their 13th generation, which is their current generation, compared to their 10th and 11th generation during these past few years, the 10th and 11th generation of their consumer products were just horrible in price to performance comparison, which led to AMD taking a large percentage of their market share. It's roughly a 35-65 split right now. It depends on the exact metrics you're using, of course, and exact time frame. And this was from like a 10-90 split. So AMD took significant market share, but some of these leading metrics are starting to show that that's kind of plateauing off. But that's, like I said, these metrics are variable in the short term. So until I start to see these kind of stay that way for the long term, I would take it with a big grain of salt. But if Intel is able just to hold on to that 65-35 split, they should be able to grow in the long term as the overall market is growing still. Perhaps the most appealing part about Intel is its push into fabrication plants or fabs, which they have been always historically, but they've really started to push into it with a new plan. The company has received multiple subsidies from the US and Germany, as well as some other countries. If they are able to execute on these fabs and compete against the industry leader of TSMC, which is what AMD, NVIDIA, and a few other major competitors in the spaces currently produce on, they could see massive increases in revenue and, of course, earnings. TSMC, for just comparison's sake, is about 3 times the market cap of Intel at this time. But that is not to say there hasn't been problems already. There's been an article about from 2 weeks ago that Intel is now expecting delays in their Germany plant because they're looking for more subsidies, which they were expected to initially start construction for this plant in 2023 in the first half, but that seems to be pushed back later now as they're looking for more funding. If this becomes another 14 nanometer situation, the company could be in serious trouble if they start to just fund in this cash over and over for these fabs and they get delayed and delayed and delayed, which is what we saw with the 14 nanometer issue. And to the lesser extent, we could see that in the GPU, which they are keeping on for now. There were rumors for quite a while that they're just going to completely drop it or lower it, which they have lowered the exposure to it and their expectations for the market, but they haven't completely dropped it, at least at this time. The company is investing significant funds into these fabs, which leads to financial risk, of course. When you're putting large amounts of cash into these huge products, mind you, it leads to, can they keep up their dividend as well as their other operations? The current dividend yield is the highest it's ever been by quite a bit. It's at 5%. I looked historically, the highest before, which was in the mid-2010s. I think 2014, 2013, it was about 4%. But historically, it's been closer to 2.5%. So 5% yield is quite high for them, to say the least. The company's operating cash flow, which is what really drives dividends and sustainability, it dropped substantially over the year. So year to date, this is only up to Q3. They're reporting in about 2 weeks again. So we'll see some updated numbers, and hopefully they will look good for the shareholders. It's only 7.7 billion versus 24 billion from the previous year. So obviously that's a substantial drop, and this substantial drop hit their free cash flow, which is your operating cash flow minus your investments. So since they're investing in these large fabrication facilities, amongst other things, their free cash flow is expected to be negative for the year, running a deficit of 2 to 4 billion. If the company doesn't see an increase in operating cash flow, you'll likely see a cut in dividends, but for now, they can sustain it. But that if they don't increase their cash flow in the next 2 or 3 years, you most likely see some sort of a cut. The company has had some cash influx, though, because they spun off their segment of Mobile Eye, and they raised about 900 million for themselves, and they still own 94% of the company, meaning the company does have an easy divestiture to make if they need to raise capital on a short term. But at this time, they're saying they want to hold it, which makes sense. Management has as well stated that they want to keep dividend at the current rate, but what management wants and what they can do isn't always the same thing. So in summary, any potential investors need to take a long-term view for Intel, at very least 3 years, but more conservatively 5 years to see this fabrication plan take place, and as well be cautious that dividends might take a pause in growth or even a cut in the worst case scenario. And perhaps the most important risk to consider is the execution risk, as we've seen them stumble quite a few times in the last few years.
Well done.
Yeah, I mean, Intel's really been a perpetual underperformer in that space going back. I mean, I think, close to a decade here, or maybe beyond that. And one of the issues is they've always seemed to kind of miss out on a lot of these big trends. So they missed out on the smart computing trend. They missed out on the GPU trend, graphic processing unit trend for machine learning. And then they're always playing catch up. So they're a major player in the space. I mean, it's not that they're not generating solid revenue and generating profitability. That's not the point, but they always seem to be behind the innovation curve. And that allows their competitors to come in and pick up market share. So we check in on Intel all the time. Certainly, like you could define it as a value play in the technology space. But when technology stocks were, rocketing upwards, Intel wasn't doing that great. And now that technology stocks have come down, Intel's come down as well. So it's kind of one of those stories that, to me, it's been more of a value trap. I think that, if you look forward, there should be opportunities for them to grow, and the valuation is, not bad. Would you say about 15 times?
Yeah, 15 times.
I mean, that's okay. But, given the history of financial performance, just the history of the company, I think that there's probably better opportunities in the technology space out there. You'd have to pay a little more for them, but you're getting a more competitive company with better growth, in my opinion.
They did have a shift of pace last year. They did change CEOs, which is nice to see. Pat Geslinger, I think his name is, who he has a background in tech. He left the company, I think, for about a decade, and then he came back as the CEO. So if they're taking more of a tech way instead of just a pure finance way, I think that's a good thing for the company long term. Like, I agree with Aaron where it's been underperforming for years now. They fell behind. So I kept alluding to the 14 nanometer issue. They were stuck on 14 nanometer, which architecture size doesn't mean much these days. It's just a good gauge. But I will add that caveat that the numbers they quote are pretty meaningless today. But they were stuck on that platform for years and years. And they were stuck as well at 4 cores for consumer processors. And then that's what happened with AMD. They came in and they started to release these high core count products, 8, 12, and then 16. And they effectively removed Intel's Enthusiast lineup, which are these high core count products, which they did have, which not many people bought. And they pushed them out of the market. And those were very high margin products, which just got removed. They don't even make them anymore.
Yeah. Yeah, so I mean, we'll wait and see. I know, like, there is a big, in the chip space, there is a big trend to reshoring. So most chips are made in Asia right now. The dominant country is Taiwan, with Taiwan Semiconductors being the dominant company. And just for national security issues now, you know, I mean, you don't want all your chips to be made overseas, right? So there's a lot of opportunity for them to pick up some market share in their foundry business. But I also think that there's other companies that, like AMD as well, that are trading at more reasonable valuations, even in NVIDIA, different story, but they just tend to be just more ahead of the curve in innovation than Intel.
Yeah. As far as just looking at the analyst estimates right now, if Intel does what analysts think it will do, then you may be buying at an opportune time now. Now, not over the course of this year, once again. Earnings are expected to be flat, basically on a per share basis over the course of this year. But jumping to 2024, you have like a 38%, then 2025, a 35%. That's what the consensus is right now. But again, as we've been watching, we could have almost had the conversation in terms of earnings the same 5 years ago. We would have said, maybe not this year for growth. A year out, they're promising tremendous growth at that point. If it came to fruition, the stock would have been trading at low valuations then. It's the same thing now. They have to execute, you know, in terms of growing that market.
And the number, I mean, if you look at those numbers, the valuation on future estimates
would look great.
Certainly it doesn't look bad. It looks value, but it's looked value for 10 years.
Yeah, it has for quite a while, and the share prices come down because they haven't really driven per share earnings. If they can do it, like you'll look smart probably buying it 14 times. If a year from now, the next 2 years, they do 38 and 35% earnings compounded over those 2 years, you'll look very smart. But it hasn't come to fruition over the past 5-8 years, say, for example. So we'll continue to watch that.